Okay, so let's get started on financial accounting, and today is the session number 1, and we will cover the basic concept of financial accounting. The goal of this class is, after this semester, I would like to see everyone you sitting here, and you are number 1. You can do the very basic financial report for your business. I just assume you are running, or you will run your own business in the future. So as a businessman, businesswoman, and the basic goal for this class is you can do very, very basic financial statements for your business. Number 2, you can read more complicated financial statements from another company. So maybe down the road, or you are as an investor on the market right now, you want to do any financial analysis, and you need to read the financial statements, and you can do the very basic financial analysis, and we will get touch a little bit of that in our last class, how to calculate the financial ratio, and you can evaluate how good or how bad the company is. Okay, what is the financial position for specific company? So we have 2 basic roles for this class, and I can almost promise you, if you follow me closely and if you do your homework, you can do it. Okay, you will learn it. Let me get a very simple survey right now at this moment. How many of you have taken any kind accounting class before? So we have more than half. Okay, so probably we can do a little bit advanced, but I was still considering, for those of you never learn anything about the accounting, so I will try to get the balance. Okay. If you think the material is too easy, let me know. Too confused, let me know. Alright, I'll do the adjustment. And I highly recommend you bring in your computer with you, because during the class we may need to do research. Alright, so bring in your computer, and we also may need to do some calculation. So a lot easier to do your calculation on the spreadsheet, much easier and better than on your calculator. Don't rely on your cell phone. Okay, when you do the calculation, don't use your cell phone. Okay, use spreadsheet instead. Alright, so the sign sheet, there are 2 different kind of forms. One is on clipboard, and that is for the school. So the form on the clipboard you need to sign in as well. That kind of format you need to sign in every class for school record. And another one, single sheet, that's for me. You only need to sign once. So there are 2 forms circulate, pass around right now on the floor. So just making sure you're signing both. Alright, and for this class, we will have 2 times homework. I will assign you 2 homeworks, and one is for today. And usually I will give you 2 weeks to do your homework. So usually 2 weeks plus 1 day. So usually it's due on Sunday afternoon, 6 p.m. And always mail your homework to me. Okay. For this class, I use Tong Professor as my communication. Okay. So for our future communication, we use this. For your homework, for your final project, for your questions, for your any communication regarding this class. So I will assign you the first homework for the day and due in 2 weeks. Sunday afternoon, 6 p.m. Send an email to me. We will have another homework down the road. And we will have one in-class midterm, 30 minutes in classroom. Usually I will schedule that on either the second to the last, August 3rd, or maybe July 20th. But more likely I may arrange in classroom midterm on the second to the last class. So probably August the 3rd. The format is very simple. I will assign you only one simple questions, and you write it down your answer. And usually I don't care about the result. I want to see the process. I want to see what's the procedure, what's the step by step you get to your conclusion. All right, and also same thing. Okay, this in the classroom. Usually I will arrange that from 11:15 to 11:45. Then when you finish that, send your answer, send an email to me. All right, so I have two homeworks, one in classroom midterm, and we have one final project. In the final project, you pick out your topic, any topic you like, any topic you are interested, and hopefully related to your business. Okay, anything you really like to do the research, and the final project is 15 minutes. 50 minutes. I prefer as a oral presentation, as a speech, and then you produce that on the movie, and you post it to YouTube or any other type website, and then you email to me. But if you don't like it, you just give me the PowerPoint, will be fine. So the reason why I highly recommend you can learn how to produce a movie. There's also another learning process. I highly recommend you learn how to do your presentation on the movie and you post it to website. And that is also good for your future business as a marketing tool. Okay, so we're gonna have two homework, one in classroom midterm, and one 15 minutes final project. And again, we will have your in-classroom participation. Highly recommend you come here. But if you miss it, it should be fine because I have a video. I have a video for each class. So it doesn't matter you are here or not, I will send an email. Usually, if something special happen, usually I email to you right next day. I'm pretty much good on time. So if you are my student before you know, I deliver to you usually Sunday afternoon. So you can use the video to review it or make out class in case you missed. All right. And for this class, we're gonna use this as our textbook. All right. It's also on your screen. I've done a survey. Okay, it's about $10. So should be affordable because I know in the United States it's very, very costly to buy the book. Okay, and since accounting by itself does not change too much, by itself it does not. It's not like the high tech. Okay, so nothing wrong. We can use one version done. Should be fine. So get a book as soon as possible, and I promise you, you will not regret to invest $10 to keep this book. And in the future, probably in the middle of somewhere you want to write something, you want to do your own financial statement, and you just forgot something. You just forgot some basic concept, and you just go back to look it up. Okay, it's very good as a textbook and also as a reference book in the future. So get it, okay, as soon as possible. Since semester is so short, don't wait. Okay, don't wait. And also another thing is, usually my midterm is from the book, and it is open book. So if you don't have the book, you lose your privilege, and this is totally up to you. So I cannot push you, but highly recommend you get a book as soon as possible. And also, if you get it late, the price may go up. really depends on the market, okay? So get it as early as possible. Right. For the financial accounting, okay, when we talk about the financial statement, anybody can tell me when we talk about financial statements, what kind of statements we are talking about? Yes, Maria?
Balance sheet.
Okay, balance sheet is one. And what else?
Income statement.
Income statements, what else?
And cash flow.
Cash flow, and what else?
Statement of retained earnings.
Return earning. That's very good. So we will talk about 4 basic statements. Balance sheet, income statement, cash flow, and return earning. And if you never heard about that, don't get panic, okay? Never heard about that is totally okay with you, but at this moment, only at this moment is okay. Next week, if you still told me I never heard about that, you got trouble. Okay, you'll get big trouble. So, as I told you, okay, few things I want you to take away from this class. And the basic terminology, you cannot forget it, okay? So if I ask you the same questions next time, and don't tell me you never heard about that. So we will talk about those 4 statements throughout this class. By the way, I think sign sheet still, still following here, right? Still following. So please sign in. There are 2 forms. The one on the clipboard, that's for the school, and one single sheet, that's for me. Please write your email very clearly, because I promise you, if you give me the email, I will send my slide to you. But still encourage you to buy the book, okay? Because the slide here is only very, very little portion from the book. It's only for my instruction purposes. You cannot replace your textbook, okay? So this is the inside page of the book. And we have ISBN copyright page here. So I will send those slides to you along with the video. Then we will cover the chapter number 1, basic financial statements, as we talk about. We will cover balance sheet for today, and probably income statement next time. And we will talk about the cash flow. We will talk about return earning. Can anybody tell me, when we talk about balance sheet, what are the major section or major items you will see on the balance sheet? Let me give the hint. There are 3. There are 3 major categories you will see, or if you prepare balance sheet, you need to include those 3 major categories.
I forgot the other one. I know there's asset,
Assets.
liability, and shareholder.
Shareholder something. Okay? Yes. Okay, close enough. Eventually 99%. Yes, okay. Let me tell you why I ask you these questions. Because once a while I help my client to start out their new company, new business, and once they start out their new business, for those of you who follow me for 1 semester already, almost a year already, you know my teaching method is try to ask you to figure out or imagine you are running your own business. So I want to put everything you learn here in the real life. I hope you can use it. You can use it. And I just imagine one new business person, once you set out your new business, you may consider I don't know, probably you may consider to rent your office. So maybe one or two, the first thing you will do is you apply for the lease agreement. Or maybe you want to open out your banking account, you want to establish some kind of relationship with a bank. And guess what? Those people, they may ask you to submit your financial statements. And if you never learn or heard about that, you're sitting there and say, huh? What are you talking about? So when people say, well, if you want to apply for this, along with your application form, we need to see your financial statements. And you know they are talking about balance sheet and income statement. Probably cash flow statement is not that important for the new business. And probably return earning is not that important. But when people start out their new business, even though you have not begun your business, at least you should know how to prepare your balance sheet and income statement. Probably balance sheet even earlier than the income statement. All right? So we'll talk about what balance sheet is. So when we talk about balance sheet, three major things in your mind. Okay? Financial accounting is not that difficult. Okay? Could be very complicated, but again, could be very easy. Just very fundamental concept. So when we talk about balance sheet, we talk about assets, we talk about liability, we talk about equity, shareholder something, alright? And the basic formula, the equation, or say basic formula, always keep this in your mind. Assets always equal to liability plus equity. So this is a very, very basic. Again, this is the thing I want you to take away with you for the whole life. Okay? Doesn't matter what kind of information or what kind of the accounting principle may change, this will not change. This will not change. We'll talk about the basic accounting principle may change. Eventually, that is one of your homework for today. We'll talk about that. Financial accounting principle may change, okay? But this format will not change, almost for sure. So when we talk about balance, always remember this. A is assets, L is liability, E is equity. All right. And then next week we'll talk about income statement. Income statement, there are two major categories on the income statement. And altogether, we will have 5 major categories for the accounting. This is it, you only need to learn 5 categories, that's all right? Doesn't matter how complex it could be for the accounting world, but you just need to learn 5 major category on the right side on the board. So highly recommend you write it down. It's also in your book. If you don't write it down, it's okay. It's in your book. I will give you the slide later on. Okay, but the reason why I highly recommend you write it down because memorize. Help people to memorize it if you can write it down. All right, but I need to remind you. Okay. A equal to L plus E is as easy as it could be. But the difficult point is, I know for the student, especially for the new student of financial accounting, I know from my past experience, okay, more difficult is how to classify. How to classify. When we talk about one item coming out, how can you qualify this one is under assets all liability, all equity, all revenue, all expenses. Okay, that is the tough point. If you put it down to right category, you have everything go wrong. All right, so keep this in your mind. Okay, for this class, we'll try to train you how to classify, how to put the right transaction in the right box. Okay, so that probably is one major point I will try to help you and also help you to learn correctly. And that is difficult. That's difficult. All right. So follow this. We will do a few exercises. Can anybody give me the example? Okay. Once you set up your new business, doesn't matter it's corporation or sole proprietorship. Okay, sole proprietorship. You run your business by yourself. If you want to run your own business, think about yourself for your own business. What kind of assets or what kind of items you need to facilitate your business? So we may consider those items, maybe consider as assets. Can you tell me? To run your business, what kind of thing you may need?
Yeah, computer, printer.
Computer, printer, desk, maybe automobile. So we can say this is equipment. Okay. Yes. So in order to run our business, at least for today's, okay, for today's business world, we may need to put in computer, printer, and probably you don't even bother to buy it because you use your computer already. You use your computer personally already. You just use your old computer, or you go to buy it, right? So probably the first category we need to use is maybe called equipment. Okay, what else? In order to run your business, just keep it very minimum. Just want to keep your business moving.
Some capital fund.
So say cash. How about that? We need cash, right? We do need cash. So you transfer. Oh, by the way, for those people, you have not taken the entrepreneur. Okay, entrepreneurship is the class. Usually, I will teach in the 4th semester. So for those of you took already, it's fine because this is by the order. Entrepreneurship, then we have business law, then we have accounting. But if you have not taken entrepreneurship, that's fine. Okay, you learn this first. Then we'll talk about step by step how to start out your own business. Okay, so come back to our scenario. So we do need cash, all right? And to run your business, okay, highly recommend you open out your business account. Okay, and we are not talking about what kind of organization yet, because in order to run your business, you can run your business as a corporation, as a limited liability company, or as a partnership. Right now, we just talk about sole proprietorship. Say you run your own business, keep simple. But down the road, in our example, maybe we may imagine your business is corporation. All right. So right now, we do not differentiate the difference from corporation to sole proprietorship. All right. So we need cash. So highly recommend we open our banking account, checking account. So you transfer the funds from your personal account to your business account, but not necessary. Maybe you can raise your fund from another source. All right. So at this moment, we know cash, equipment, they are all under assets category. That's fine. Whenever we talk about cash, okay, hard money, we talk about assets account. When we talk about equipment, computer, printer, automobile, equipment, again, is very basic assets. What else could be? Maria?
Right. Accrued incomes, stocks.
Okay, stocks. Hold it up, stocks. Yeah, we may need to issue the stock, okay? But right now, be very careful, okay? Because right now, I try to simplify everything. Remember, okay, for throughout the whole class, we will only focus on 5 categories. Alright? So to begin with this class, I will only talk about assets right now. And stock is not assets. Be careful. So that's why I said, I know from my experience from the past, okay, I know it's pretty tough for students to differentiate which account is which. So in order to give you simple idea, very easy simple idea, I try to start from assets account, assets category. So any other thing in your mind, we may need to start with our business, which is under the assets account. So we have cash, we have equipment. What else could be?
Inventory. Inventory.
Inventory, big thing. Inventory is another big items under assets account. However, if we talk about our business into 2 different worlds, there are 2 major different kind of business. One is called services. If we are in the services, then we luckily we escape from inventory. Inventory is a headache, okay? So if you have choice, highly recommend try to escape from inventory. But it is not that lucky, for everybody. If we were in the manufacturing, we are in the wholesale, we are in the retailing, okay, we have to deal with inventory. So keep this in mind. Inventory is another type assets. What else?
How about office space? Office space.
Okay, let's talk about this. Let's talk about office. Let's talk about office. Assuming our business is running very well. So to begin with, we start from our garage, okay? Then 6 months later, our business is moving very smoothly. So we think very comfortable. Okay, it is time. Okay, we will go ahead to rent or even purchase the office. All right. So let's talk about purchase. If you financially is very stable, so you go out to buy a building as a headquarters. So there's no problem. So if you purchase real estate, it is your assets, and also we will talk about that. If you purchased real estate, real property, it is considered as fixed assets. Fixed assets, and for the fixed assets, let me ask you: if you purchase any kind fixed assets, number one, you will put that under the assets. There's no problem. Okay, this for sure. But what is the issue? Follow out your fixed assets. We'll talk about that down the road. But anything in your mind, when we purchase any kind of fixed assets like automobile, like
Texas.
depreciation, and we'll talk about depreciation later on. We'll deal with that. Okay, so I will leave it alone right now. But fixed assets, okay, automobile, equipment. Eventually, when we talk about computer usually subject to depreciation, but there is special tax code. We can write it off right away. So I just leave depreciation issue out right now. Okay, so no problem. If you purchase office, it is assets. But what about you lease office? Let's talk about this. It's tougher and tougher, okay? If we lease, say 5-year lease,
It's liability.
so when we lease 5 years, we just sign off the lease agreement at this moment. Is the lease the assets, liability?
Expense.
It must be something, right? It must be something under number 1 to number 5. It must be something, right?
Expenses.
Okay, we just keep this issue. Okay, just keep it because it could be anything. It could be. Really depends. So when we sign out the lease agreement at this moment, really depends on your operation. Really depends on your operation. We'll talk about probably next week. If your business is cash basis mean only up until the moment you pay cash, then you entry your accounting. Versus accrue basis. Accrue basis mean once you enter any agreement, even without cash payment, you need to enter. You need to entry your transaction. So there are two major accounting method. One is called cash method, the other one is called accrue method. Eventually, this is number one hint for you for your final project. Even right now, it's just beginning of the class. I try to give you the hint what kind of legal research you can do. Okay, cash basis versus accrue basis is a big item you may consider to do your research and consider this as your final project, because a lot of things you can do, a lot of research you can do. But for this class, okay, everything here, example we're gonna talk about for this class, the book just assume all business is accrue method, okay? But let me give you the idea. Okay? For the small business mean your annual sales under 2.3 million. Okay, gross sales under $3 million. We consider this is no legal definition, but just give you the idea. We have our option to choose cash method. Cash method is a lot easier for the bookkeeping. Okay, for bookkeeping is a lot easier. For tax purposes, cash method is a lot easier. Okay. However, for this book, all of example is based on accrue method. We'll talk about that. All right. So right now we have a fixed assets. What else? One or two more, then we'll move on. How about something you provide a service already, or you deliver your goods already, but the money has not coming in? What's that? What's that called? Yeah, account receivable. It's a AR, A/R. This is a big item. Okay, account receivable is another asset, and versus account payable. Account payable is liability. We'll talk about that. Okay, anything receivable, not necessarily account. Okay, anything receivable, consider as assets. Yes.
What about intangible assets?
Yes. Very good.
Goodwill, patents.
Yeah. Say you have a trademark, you have a copyright. Okay. You have a license. Say for example, you license somebody. Say for example, franchise. Franchise is very important thing you consider. In my idea, if you can run a franchise, it's better than IPO. Because if you run a business, go to IPO, you're subject to a lot of regulation. You are scrutinized by the government, scrutinized by the CPA firm, scrutinized law enforcement agency. And the franchise, a lot easier. I don't mean no regulation, but a lot easier than IPO. So if you can run your business very successfully, consider franchise. All right, you are franchisor, and you license your brand name to somebody else. So that kind of intangible. Okay, good enough. Okay, so let's do some more example. Okay, so right now we have an idea about assets. However, this is another concept very important for the accounting. That is called double entry, or say duality. For each transaction, we must pick out 2 or more category, okay, to match each other. Okay, I will give you one example very soon. All right, very soon. Okay, so just remember this is another very important accounting basic concept. For every kind of transaction, okay, we need to pick out at least 2 accounts. I need to correct myself, not 2 category, okay? Maybe same category, maybe it's under the same category, but for every kind of transaction, we must pick out minimum 2 accounts to enter into the amount or the number. Okay, I will give you an example. Okay, so you will understand very soon. All right. So come back to my book here. For this book, each chapter has one company as example. So on your page number 5. There's one very simple diagram to tell you the difference. What is the difference between financial accounting and the managerial accounting? And this class is more focused on financial accounting. All right. I can tell you the major difference is financial accounting is for the outsider. It's for outsider. If you're running your business, you prepare financial accounting probably for your bank, for your landlord, okay, and probably for your investor. So financial accounting is more focused on outsider, and the managerial accounting is for the decision maker. Say for example, manager. Oh, by the way, financial accounting, as I say, more focused on investor. So when you read each IPO, or I say public company, okay, for each public trading company, they are required by SEC, Security Exchange Committees, to post it, to disclose their current financial situation, okay, on their website. So as I said, highly recommend you bring in your computer. Once in a while, we need to do the online research. If you can get online right now, you just Google it. Any major company, you name it, Cisco, Microsoft, Facebook, whatsoever. As long as they are public company, you just go into their website, official website, and on the bottom you will see financial statement. Sometimes they are under the public relationship. Okay, you will see it, the current one, the annual report and the quarterly report. So financial accounting is for the outsider. Managerial accounting is for the manager or for the decision maker. Okay, there are 4 basic financial reports. We mentioned that already, right? However, they are related. They are related to each other. So usually, you will see the diagram very soon. Usually, we're starting from the retained earning. We're starting from the retained earning. Then the number will go from retained earning. Okay, we'll see cash. we'll see income statement, then we'll see balance sheet. So they are related to each other. Even though by the order in this class we'll talk about the balance sheet first, but in the reality you may do the income statement first, right? For each year, for each cycle. So on page number 7, and this is the sample of balance sheet. You can see this company. Okay. The cash here, account receivable there, inventory, fixed assets. If you have book, this is on page 7. You have land, you have total assets, okay? And this amount, total assets here for this company, $27 million or say $27 billion whatsoever. This number must equivalent to the bottom, the number of liability plus equity. We'll show you very soon. Okay. See on the page here, 27 million under the assets and 27 million under the liability plus equity. Alright. So this is basic. If you done your balance sheet, however you found out the number does not match to each other, something must be wrong. You need to go back to check each item. And the good thing is right now if we use computer software to do your, say, what's the major one? Quicken, right? Quicken book. Yeah, Quicken book, right? Oh, by the way, Excel by itself is not designed for accounting, right? But nothing wrong, okay? For the small business, nothing wrong. We use Excel or any other kind of spreadsheet to do our bookkeeping. That's fine, but spreadsheet by itself is not for accounting purposes because it cannot balance for yourself. It cannot do the balance for you. But for the Quicken or for any kind of the software, they can do the error check for you. So you have done anything wrong, you will give it an alert right away. Okay. Anybody use your accounting software? QuickBook, right? QuickBook is easy to use. Quicken, right? Microsoft, right? Anyway, it was easy to use.
Quick, I think QuickBook is Microsoft. Quick is not Microsoft.
Okay, but it's easy, very easy to use. Okay, and a good, yes. And I'm not trying to promote anything, but anyway, the good software not only give you the very clear and correct the bookkeeping, but also lead to you to the tax report. When you file the tax, you can convert it. You can convert it to your tax return. So save you a lot of effort, when you prepare to file tax return. So as I say, if you use a spreadsheet cannot convert it. So you need to do it again. By the time you need to prepare your tax, you need to do it again. But use a very good software, it saves you a lot of headache. Of course, another easy way is you hire somebody to do it for you, okay? But even you hire somebody to do it for you, you still need to know how to do it. If somebody done anything wrong, you can check it. You can see where is the problem, where is the mistake. Okay. On your page number 8, here it is. Assets is equal to liability plus shareholders' equity. So when it says shareholder, usually means this is a corporation. However, if you are running your business as a sole proprietorship, your format is still the same. Okay, probably there's no shareholder. Well, you are yourself, right? But you are still owner, right? You still need to put owner equities there, right? Not necessarily shareholder, but it's the same, very similar. Another thing we will talk about next time is the income statement. Well, I just give you the brief, okay? The formula on your income statement, that's the revenue minus your expenses, then you receive your net income, or say net profit. Okay, this is a very basic and however very important thing. And for those people, if they never learn accounting ever, there is one very major common mistake I see over and over again, and don't commit the same mistake. That is, when people calculate their business income or the income from their transaction from the sales, assuming you are the seller, there is a very major common mistake is they calculate their net profit from the gross sales, no problem. However, when they deduct expenses, they also deduct the loan they pay off. You understood? Let me repeat it. That is wrong. That is mistake. You cannot do it, okay? Say for example, your company just sell a factory. So you just sell your office. You own piece of the land, and also on the land you have the building. So either for your personal or for your business, at one point you sold these fixed assets. Say you sold at $3 million. So you know your gross revenue is $3 million, that's fine. And you sold this through the title company, so you receive the statement. So $3 million minus the commission, say, well, 90,000, and you sold the transfer tax, you pay for the escrow fee, blah, blah, blah. So you have $3 million deduct, say, well, just say 150,000 transaction expenses. That's fine. That is your transaction expenses. So your net proceed, okay, say for example at this moment you received 2.9 million, all right? So 2.9 million still is revenue, is not the profit. Then at this moment you need to determine your cost. Your cost supposed to be the original cost. Say you purchase at 1.5, okay, plus whatsoever the money you put in for improvement. Say during the years you put in $500,000 to do the renovation. So you have a 1.5 plus 500,000. Then you deduct depreciation during the years whatsoever you do the depreciation already. Say, so for example, accumulated depreciation is 200,000. So if this is the situation, your cost is 1.5 plus 200,000, or say I say $500,000, right? $500,000 improvement, the minus 200,000 accumulated depreciation. So this is your cost. So you have 2.9, right? And then say 1.5 plus 1.5 plus this is 2 minus 200. So your cost is 1.8. Follow me so far? You follow me so far? So your sales 2.9 minus, okay, 1.8. So your at this moment your net profit supposed to be around, so 2.9, 1.8, 1.1. This is your profit, all right? However, I've seen over and over again when people calculate their revenue, they always have a 2.9 minus, say for example, 1.4. And you ask, what's 1.4 for? Say, I pay off for the loan. No, the loan you pay off, you cannot deduct that in order to calculate your profit. See here, go back to here. The income statement only stated say revenue minus expenses, you get your net profit. Did you see anything loan payoff here? No. Any loan you pay off, it is not your expenses. Loan is your liability. Loan is not expenses. So that's the reason why I say it's so important for the student of accounting. You need to differentiate 1, 2, 3, 4, 5 category. You cannot mix them up. If you mix them up, don't be wrong. Okay, don't be wrong. You will make major mistake. So if the people they deduct the loan payoff from the income statement, that means number one, they never learned accounting, or number two, they did not learn well. Okay, they did learn, but they did not learn well because they mix liability with expenses. And I know for the people sitting here right now, you may not have very clear idea what's the difference between liability and expenses. It's okay.